Good evening and welcome to the Trading the Tech Show. My name is Derek. This is iLi Academy, and today is Thursday, December 17th. So it's our final show for the week. As far as the Trading the Tech Show, we do have one more daily market overview show in the morning. So we'll go ahead and see kind of what our charts are doing at this point in time. We had a really um, fairly volatile day in the market today. We had a lot of movement kind of going on. The Dow Jones actually was very active. But even before New York Stock Exchange got open last night, we started to really get some movement in our accounts. Most of them going into better equity positions. So that's always good news. That's what you want to see, because the way that we kind of approach it is that we build balance first. And primarily we just build into the balance. We keep building into the balance. And then if we're trading along with the trend, eventually as the pairs go in direction of trend, then they should actually kind of close in the equity for us. So we kind of use the market to help us with that. So we're not looking at single trades all the time. We're looking at the account as a whole, and that's how we're managing it. So that's what we're basically, that's basically what we're trying to accomplish, is to get our equity to come up and kind of match our balance. But we have to get enough balance so that we can use some of that balance at some points to, even if we get to that point where we can cut all of the trades, we sit in a nice equity percentage position. Somewhere between 5 and 10% is always good. Sometimes we can do a little bit more, but other than that, we typically look for about 5 to 10%. And then anything above that 5 to 10% gain in balance, we start using those funds to cut the bad trades. So we make a few trades, we win those trades, we're profitable, we take that money and we look for, okay, what trades can I cut? And maybe it's like, maybe you look at one and say, okay, this one is a little higher than the other ones. Or this one might be in the middle, but I really want to cut that particular one. Maybe it takes more margin, like maybe a Great British Pound pair. And you look and say, okay, I can free up that margin, but I need this amount. I need $20 or I need $25. So I'm going to make, increase the balance above my equity point by $25. And then I'm going to use that money to cut that other trade. Now it takes time, so it doesn't always work out that way, but that's how the plan goes. So sometimes we get close to that number and we go, okay, we can get there or whatever. If it's within a couple dollars, we can use that extra money to cut. So a lot of times traders will get enamored with the balance on the account when it's really the equity that counts. So we don't want to get enamored necessarily with the balance itself, because that money is there. Our money is a tool. Remember, it's always still just a tool. So it's helping us make money, but it's also helping us cut our bad trades when it's advantageous to us. So we're using profits to cut our bad trades instead of just cutting our bad trades and hoping that we make that money up plus some more to make profit. Just teaching that, I think, is a lot different than most people are teaching in the Forex arena today. And I think that's why we're going to be successful. Now, looking at today's Dow, the Dow was up 148 points. Not bad. We closed at 30,303. So very, very good for today in the Dow. And so that's one of the reasons why we had so much success in our accounts today, and we were able to build into the balance quite a bit more and close some of the equity gap too. Right now, we've got red across the board in the futures. The S&P futures right now show down 4 3/4. The Dow futures show down 50 points even. The NASDAQ futures are down 23.5, and then Russell 2000 futures down 3.3. So that's going to change a lot before the markets open tomorrow. So, we've got a long time in between there, but it might give us a vision on what's going to happen in Asia overnight, and then in the Australian markets as well. And then Great Britain and the European Union, when they open, then we'll see we'll get more shaping into our futures for what's going to happen. But right now, the FTSE's down 19.85 points. The Nikkei 225 is down 14.22 right now. So Right now they're down. So if they continue to be down throughout the day, then maybe we can be expecting a down day for the Dow Jones tomorrow. It's kind of the way it's been happening. It's been running up a little bit and then backing off, running up a little bit and backing off a bit. So that 30,000 mark is going to be kind of a bit of it's going to be a very elastic around that 30,000 mark. So we can expect this to occur for a while because this is a very significant level that we've passed with 30,000. We want to be sure. So let's go and take a look at our charts here. What I'm doing now, I am running, I've been testing this. I've been testing this software, this new the new auto trader software, and just testing some different time frames, things like that on it as well. So this is a 15-minute time frame. So it's already at a point where it can place a buy stop. You see it was a buy stop, but the order did go up there and hit that. So it turned into a buy now. So anytime you see like this blue arrow here, this is your buy stop, and then it actually expires after a certain length of time. So we don't want that order to sit on the account permanently. We want that order to be able to come off of the account without us necessarily having to touch it. Maybe we're asleep or maybe we're at work or something like that. We had those orders time out. So if they're not hit or executed within, however many hours, we can actually set that, we can say, 48 hours or 24 hours, we can put that right into the system. If it does not execute within that time, then that order will disappear. And then it'll look for the next parameter. If the parameter is still there, it may actually improve the trade as well. It may improve the place where you might be able to get in at. And then the clock starts again. What you see here now, this actually eclipsed our buy. So the price went up, hit the buy, it bounced down here around the 720, but then it bounced up again. And so it's taking off to the upside now. So what you see is the stop loss did come in to protect our profits here. It did bounce in, and then we got a profit, a stop loss that's following on this moving average, which is our 100 moving average. So our 100 moving average serves as our stop. And you'll see that this is going to continue on up here. And as the moving average moves, the stop loss will move along with it. So that was tough to kind of get programmed to, but it's, it is definitely working. Sometimes it's just a, small little thing in the code and it doesn't work, but I was able to kind of figure it out and get it going. So this is moving very, very slow. I can actually, I can make it move a little bit faster. Matter of fact, that's what I'm going to do here. You kind of got an idea of what it's doing and how it's performing. One of the things that came down here fell below our 200. So I've got it right now where if it falls below the 200, which is this orange moving average, but the moving averages are above our 720, kind of like what we talk about each night, as long as we're bullish, right? So we're bullish in this situation. So we drop our order, not on the 200, but we dropped our order here on the 50. I haven't figured out how to get it. I don't want to do a calculation yet. Because calculations are very tough in MT4 because you have 3-digit and 5-digit pairs. And I'm just gonna have to straighten that out. I will get that eventually done, but today I don't have it yet. So I don't have a mastery on it just yet to make sure that it's gonna work correctly. So to soothe that situation and make it just blanket across the board work, what I did was anytime the rate falls down here below the 200, then we can drop our order here on our 100 for our entry. And so you can see that the pair became an actual order here. So it was within the time frame. And so it became an actual order, even though the rate dropped back down and tested the 720 again, it bounced off to the upside. Our stop loss kicks in when we're above our entry point. And then when our 100 takes over and it jumps over as well, and it starts to get above our entry point, the stop loss begins to follow the 100 up. And so what I'm going to do, I'm going to go ahead and speed this up. It's going to be really fast. Hopefully it'll translate into the video, but I'm going to step this up one notch. You can see how the stop loss is moving up with the trade and then it exits, right? So as we go here, we got another entry order there. We bought, our stop loss kicked in. Sorry about that. There's a little cooking going on in the background because we're a little late here today. So you can see on our graph here how we did dip down just a little bit. There's going to be some times when we have some orders that don't necessarily go our way. So I've been working very hard and diligently to find out how to limit the loss trades because they tend to be pretty strong. So I want to be able to limit them. If certain event happens, then I can limit that. So I'm just looking for the sweet spot for that to keep our losses lower, but not impede the ability for our trade to continue to the upside or to the downside if we're going that direction. But all in all, this version of it has been producing pretty good as far as the charts go. It's not too many trades in the time that this was actually running from October to, let's see, let me go back here, see if I can find kind of where our first order happened. Our first order happened here. Oh no, this was December 4th. It's a 15-minute chart. So it was only from December 4th up until today. We would have had 4 orders. Yep, 4 orders in that amount of days. But it would have been profitable too. So it's carefully picking those particular orders when the parameter is there. Now I may add a second entry too. I was trying to get it programmed today, but it didn't seem like it wanted to work yet. So we're going to try to add a second entry on top of it as well. But right now, this is actually working for us pretty well. It's kind of the same strategy that we're using. Now, I may change it from the 200 to the 100. We'll have to see, but then all of the parameters need to change. So far, though, this particular one has worked well. And when I switched it over to the 15-minute chart, it performed better than it did on the 30-minute chart. It performed on the 30-minute chart most of the time, too. But I wanted to see how it performed on the 15-minute chart to see if that was a better performance. And I almost think that it was. But I got to still test. All right. So I'm gonna go ahead and get out of that. I just wanted you to see kind of what I was doing there and what I had been working on. So now we're gonna go through our pairs and see what we've got going on for the week. What kind of direction had been set and where we've ended up so far. So here on the Aussie CAD, now this is a 15-minute chart. So we're gonna look at this on the 15-minute chart instead of the 30-minute chart tonight because I've got this this actually running, this moving, automated trader, automated trading software, the signature effects software. I've got it running now live on my account. So live with real money. So I'm running it and I want to see what it does. And, I like to do that in live trading. I don't like to do it necessarily just in demo or back testing. I'm really not a real fan of back testing. I like to test forward so I can see what actually happens. Because everything that happens in a back test is only really dealing with the account when it only has one pair running. But that's not the same as if you have 20 pairs running and you're coming in and out of different pairs. Sometimes you're not even going to be able to take that other order because you don't have the margin to take that other order, or maybe you're just not in a position to take that order. So that could play a factor too. So it's better to see it live because you're going to miss some of those errant trades that we're seeing in backtest. You'll miss some just for the fact that you would never enter that trade because you're either in another one already and then you didn't have the margin to actually even enter the trade. So I like to get the feel for it in a live environment. Let's look at our Aussie CAD. Our Aussie CAD here is trading everything above our 720 here. The moving averages are above the 720, so that makes us bullish. I'm going to go over here and see if I can find my my charts here. Let's go here. Had a power outage last night, so some of this may not be set up as correctly as I want it to be. I had to do my morning show on my telephone, so fortunately I was able to do that so we didn't miss. But our Australian dollar CAD on this daily chart is confirming what we see too. So we see that we've got this move to the upside here. We've got a bullish chart there going on, and we've got the same thing here on our 15-minute as well. And so we're waiting for pullbacks past our 50 and past our 100. We got a little bit past the 50 here. We could have probably dropped an order there if we were pretty quick to drop in order to buy there. Or we could have used the 21, which it's just eclipsing now. Either way, it'd be slightly profitable at this moment. And we'd have to kind of wait on it and see what else occurs. As far as the Aussie yen, same thing. We're trading above the 720, so we're bullish here. If we go over here to our TradingView software on our daily chart, it confirms that same thing here. We're above our 720. So we're waiting on pullbacks of the rate past our 100, past our 50, maybe down here to the 200. The automated trader uses the 200, but in our manual trading, we'll use the 100 because we're going to be there to close those trades out. Manually, we're going to close those trades out. For the automated trader, just from the testing, looks like the 200 might be okay for us. But I may go ahead and switch it over to the 100 because live trading, like I said, is going to be different than back testing. It's definitely going to be different for you because there are other trades that will be in the market. So we'll see how that goes. But yeah, so we're just waiting here on pullbacks. We got a couple already down here to the 100, and then so we could have dropped our order here on this 50, and we would have a profitable trade right now. Yeah. Aussie New Zealand, you can see that we're trading above our 720 here. Our moving averages are not quite in order, but they are above the 720, so we are bullish for the most part there. Our preferred direction is going to be to the upside. If we look at the Australian dollar here on the daily chart, we can see that we're hugging that 720 right now. We've been there for like 4 days. We haven't really been able to close above it. And we've got our trend lines kind of indicating some downward move. But this may be ready to break that move down. So we'll see if this can actually break this level, the 720, it might actually go up here and break this trend line that we drew. So it's so right now it's not really concurring with what we see so much on the 15-minute chart here, but it's giving us enough insight to know that maybe it might on the daily chart jump back over the 720, and if it does, then there may be some momentum to the upside. We'll have to see. So maybe that's why it's a little bit crazy here. You know, it's had these wild swings up and down here. So we could have played this big swing here for Fibonacci retracement. This big swing as well could have been played for one. So there's a lot of opportunity here. There's been a lot of opportunity to place some trades. So we're not without opportunity at all. So right now, what we're doing is we'd wait for a pull down past this 200. And if we pull back past the 200, then our 50 and our 100 are up here, not too far away. We can drop our orders there to buy. As far as the Aussie US, we're trading above our 720 here. So we're bullish. We're pulling back now. We pulled back past the 50. And now we're here sitting right here on the 100. If I'm going to place an order, I'm going to place it here on this 50 to buy. I'd right click, go to trading and hit buy stop. All right. So if we look at our Aussie here on our TradingView software, it's going to confirm what we see on our 15-minute. It's bullish as well. If I look at the CAD yen here on the daily chart, it's bullish as well. It's above our 720. All the moving averages are up there and the rate is above. So that tells us we're bullish. So if I go here to my chart and I look, it's divergent. So my 15-minute is divergent from my daily chart. So that tells me that this 15-minute move down may not last forever. So we may actually get that move back to the upside. So this CAD yen here has kicked in an order. I think this was one of the other orders I was working on. This is an early rendition because it's got a take profit in it. But it did take the order live. I was testing that and it did take the order live. So if it does go back to the upside, we should get that move. However, if I'm trading manually, I do respect the chart. I'm going to respect the 720 as being above the rate and above the other moving averages. So I respect the 720 for telling me that we're in a bullish move right now. I mean, a bearish move right now to the downside. Now, I do see kind of like a breakout bounce here because I've got this low that was created. We went around, we didn't break it here and we bounced up, but the overall test was here. So we came here, we bounced all the way around, came down, tested again. We really didn't break that low. And now we may trade off to the upside. That's kind of what the breakout bounce is for me. All right. So, so we'll wait and see what happens, but I do respect the 720. So as we pull up past this 100, I would drop my order here on this 50 to sell. Doesn't mean that either or is going to be wrong. Doesn't mean that either or is going to be right. But right now, I can only go with what my chart tells me. I don't try to make things up for the chart to tell me or whatever I want it to tell me, or I don't need to really try to fit it to my order. I just need to do what the chart tells me is happening at that moment in time. And then we make our adjustments from there. Now on the Swiss yen, oh, I know what it was. These buys are happening because they were on the 30-minute chart. I'm like, why are they below? But I'm on a 15-minute chart, which changes everything. So it can change what order you would take based on what chart you're on. So that's important to remember when you start dealing with time frames. But on this Swiss yen, looking at this, I'm trading below my 720 here on the 15-minute chart. I've traded up here beyond my 720, my 200. And so I could drop an order here on my 100 to sell, right around this 116.66 mark. If I go over here to my Swiss yen daily chart, it's showing an upward move. It's not showing a downward move, right? So it's showing that the preferred direction's to the upside. So it doesn't mean that this isn't going to come down and test here, because it may actually come down and test this area that was resistance before. So that's maybe based along this grid line, kind of where our 100's sitting right now. And so it may come down here and test, and then who knows, it may bounce, it may not. So we'll have to just watch it and see. But we know that it's divergent from what we see here on our 15-minute chart. So we want to be careful when we place this order, that we place the order out in front as a pending order. And if it's placed out there and it never comes back, then that order should be deleted by us by hand. Now the software is going to do that automatically. After a certain number of hours, it's going to say, you know what, this order hasn't executed, I'm going to close it. And then we can add another order. As far as the Euro Aussie, looking at it here, we're trading below our 720. Our moving average are all below the 720 as well. So we're going to be bearish here. We've pulled up past our 200 now. So we can actually drop an order here to sell on this 200, this 50, or this 100 moving average right here. So any one of those we can drop it on. It's kind of, free range right now for us to do that based on this 15-minute chart. I'm going to look at my Euro Aussie here on the daily chart to see if that corresponds. The direction does correspond. So just in general, we're below our 720. All the moving averages are below as well. So that's going to correspond with us having a bearish trade going on. Let's look at the Euro CAD really quickly. Euro CAD is showing something different. So it's euro based, but it's against the Canadian dollar. It's rising above our 720. The moving averages are above the 720 as well. They're a little bit inverted because the 50 is below the 100, but we're going to see if that straightens out. But we do in general have a bullish chart. Here on the 15-minute, we've got a bearish chart. So that might throw you off, but that's why you have to just really know the strategy itself and know that this particular chart, this 15-minute chart, or if it's our 30-minute chart, or if you're using an hour chart, whatever one you're using is going to be your decision maker. It's not going to be the daily chart unless you're using the daily chart as your decision-making chart. And maybe you're trading a lot more long-term or a lot larger account, and you're not concerned about making trades every day. You want to make trades once in a while, because it will take a while for that daily chart to make a trade. So it's going to take forever, and for it to manage it, it's going to take a long time. Most of us don't really have that patience to wait that long. Or the account that's going to withstand the swings that will happen on that daily chart. It's going to be very, very tough. So as far as the Euro Aussie right now, I can definitely place order to short here. We'll just watch it though, because we know it might go to the upside, and then we'll have to cancel those orders if they don't get executed. Now, as far as the Euro CAD, looking at this, we have a beautiful trend to the upside here, full mature trend above our 720. All the moving averages are in order all the way to the top in numerical order, right? We've got our 200, 100, 50, 21, 8 in order. They're not crossed over each other. So we've got trend to the upside. Now, this is what we like to catch. If we can catch this on a dip down here and You know, some dip maybe past the 100 or past the 50 or whatever. If we can catch this on a dip and then we can ride this up, this is what I'm trying to do. It's difficult because the market ranges back and forth so much. Like it's not easy to actually program that. When you program and when you backtest, you really can look at the market and see how it moves and understand why your stops get hit or why it came down and hit your stop and then all of a sudden moved off in your direction and there's nothing you can do about it, you know, except not have a stop, you know, for to protect your profits. So that happens. So this is the Euro CAD. We're definitely bullish there. We're just waiting on a pullback across those moving averages, and it concurs here with our chart. On the Euro Swiss, we see that we are above the 720, and the rate is trading above all the moving averages right now. So that's a good sign for us. That means we're bullish. If we're looking at the Euro Swiss here on the 15-minute chart, same thing. We got full mature trend to the upside. We're just waiting on pullbacks to the 50, pullbacks to the 100, and then we can drop orders to the upside. As far as the Euro Pound, we see that we're trading beneath our 720 here. Our moving averages are not in order per se, but the rate has pulled back to the past the 200. So that's pulling the moving averages up. So if I was doing anything here, I'd short on the 200 or this 50 or this 100. The 100 is going to be a little more conservative if you want to kind of wait it out and make sure it's moving that direction. But if I look at the Euro Pound here on the daily chart, you can see that we did, even though we're sitting right here near the 720, we are starting to pull away from it just a little bit. So we'll see if the moving averages continue to go with it to the upside. They're already on the upside. They had the 50 at least had fallen below the 720, but it's actually returned above the 720. So that's why I say we're probably bullish on this, because that looks like where the momentum is going. Now looking at the Euro Yen, we're trading above their 720. We've got this trend that's just developed. It's a nice mature trend. It's just developing, just starting to widen out. So we've got to wait for pullbacks past our 50 and past our 100 at least. Look at the Euro Yen over here. It confirms our move to the upside. So it's got a little consolidation going on here, but if it breaks out of that consolidation, then we're going to end up going to the upside, and that should be pretty good. Right? We should be happy with that. So it concurs with what we saw in the Euro Yen on the 15-minute chart. Now this Euro New Zealand, we can see that we're trading well below our 720 here. The moving averages are below as well. So we're going to be bearish on this Euro New Zealand, basically in our mind. That's the filter. When we look at the Euro New Zealand on the actual 15-minute chart, which is our decision maker, we see that our rate is above the 720. Two moving averages, the 8 and 21, are above the 720, but the main moving average, the 50, the 100, and the 200 are below. So what we can do is I would maybe be conservative and drop my order here to sell based on the 100 moving average, 171.37 area. And if it returns back with a head of steam, then we should be able to enter that order. Just depends on how long it's going to take to come back. If not, and it continues to the upside, we delete that order and we're fine, right? Now, as far as the Euro US, this is nice because we've got a nice trend to the upside here. We've got a full trend to the upside. So we're above our 720, so we're going to be bullish. We've got to wait for pullbacks just a little bit more because right now it's pulling back past the 50 pretty well. So, and then it should, you know, hopefully get down here near the 100. If it does that, then we can definitely drop our order on the 50 and keep it there. Now let's look at the Euro US here on our charts here on TradingView. On our charts here, it confirms our bullish position. So it looks like it's resumed that move to the upside and it's just going to keep on going. All right, now Pound Aussie. On this 15-minute chart, the Pound Aussie, we're trading below our 720. We've got our moving averages all now below the 720. They kind of changed position on us yesterday. So now we're all below the 720. And so we're trying to create our situation. Now this 200, interestingly, never actually jumped over the 720. just kind of stayed underneath it. And you notice the rate actually is like elastic. It comes right back there. So it's going to go back there and test that level. So our short would have had to be on the short would have had to be on the 200 itself. But it's all over the place. It's above, then it's below. We got trend kind of trying to set up above, and then it doesn't, so, that's craziness right there. So some points in time, we just don't want to take those particular trades just because we want to be careful. But if we look at the daily chart too, the trajectory has been to the downside. Our trend is to the downside. So looking at this may resume its move to the downside. Pound CAD, a little bit different. We've got our trade well above, we've got our rate trading well above our 720, and all of our moving averages above the 720 as well. So we've got a bullish chart there for the 15-minute, but we're going to look over here at our pound CAD on our daily chart. Okay, so our rate now is above the 720, and we've got our moving averages that never ever crossed the 720. So this is a good sign that we should have momentum to the upside. Right? Doesn't guarantee it, but it does give us the feeling that that's what's going on. So we're going to wait for pullbacks here past it. We've already pulled back past the 50. If you want to drop the order in on the 50, you can. We can wait for a pullback past this 100 and then improve the order to the 100. As far as the pound Swiss goes, we're trading above our 720. The moving averages are all above. And so we've pulled back even past the 100 now. So we can drop an order to buy, a pending order, buy stop on this 100, maybe this 21, or even the 50 here. And then we just wait for the price action to move in our direction. But does the Swiss on our daily chart confirm? Yes, so now the rate on the Swiss has jumped over our 720, it jumped back over. The moving averages never supported that move lower, really. It just, they never jumped below the 720. So we didn't get that deep a fall. So that's good. So let's take a look here. Pound yen, we're trading above our 720, well above that. Our moving averages are above the 720 as well. And so we're bullish there. If we go here and look at our pound yen on this 15-minute chart, we see that we're bullish here as well. We're trading above the 720. We're waiting on pullbacks now. We got to pull back past our 100 and past our 50. I drop an order to buy here on the 50 at 140.02. And we should get some movement to the upside there. Let me go ahead and spread these out so we can see the rest of our pairs here. There we go. Pound US. Very similar chart, right? So above our 720, we're bullish. And now we're pulling back, and we've pulled back even past this 100. So we can drop an order on the 100 or on this 50 as a more conservative trade to buy, because we need buyers there. Now, if we look on our chart here for the daily chart for the pound US, we see that we are bullish here, right? We're not even close to bearish. As far as the New Zealand CAD goes, we're trading well above the 720. So that's on the daily chart. And it looks like we are definitely moving to the upside here, or our upside should be our penchant. So let's go here to New Zealand CAD on the 15-minute. Kind of the same thing, right? We've got our 720 here. All the moving averages are in order to the upside. We're just waiting on pullbacks past these two levels. Now, New Zealand Swiss. As far as the New Zealand Swiss, we are trading above our 720 here. We've got a pullback going on now. We pulled back past our 50, and we're headed down here kind of to the 100 again. We were briefly below it, but we may actually trade below it again. We'll see. But we can drop our order here on the 50 if we're being ambitious right now, and we don't mind being a little close to the edge there. Right now, the ask is 63,197, 0.63197. And so the value of the 50 is 0.6321. So there's like one and a third of a pip, left for us there. So between the asking price and where we are. So it's almost like placing a market order. Me personally, I'd probably wait till it got a little bit further down. That gives me some distance. So it has to move in my direction to put me in the trade. Now, as far as the New Zealand yen, Same thing here. We're trading above our 720. We've got our full trend, mature trend to the upside. The moving averages are all straightened out now in order to the upside. And we see that none of them are crossed over each other. They're in numerical order to the upside. So we got a full trend. We just got to wait on pullbacks past our 50 and our 100. We go here. So New Zealand Swiss. Let's go here, New Zealand Yen. New Zealand Yen confirms the same thing on the daily chart. Should be momentum to the upside. Now, New Zealand US, same thing, momentum to the upside here. We can see we're well above our 720. We've been that way for a while, so it's not a surprise for us. We go down here to our New Zealand US, and we're trading above our 720. We've got our moving averages all above the 720, and then they're coming down here because the rate has actually come down here and touched our 100. So we could buy here on this 50, right around this 0.7147 area. We can buy there. If it keeps on coming down, improve that order to the 100. If it keeps on coming down from there, improve it to the 200. We can always improve our orders. But you got to give it space. You got to give it some room, at least about 10 pips or so that you don't get caught in it. If it, takes you down in the wrong direction. Now, as far as the US dollar CAD goes, we are in pullback mode right now. We're pulling back towards our 720, but the 720 is above. All the moving averages are below. We pulled back past our 200, so we can actually drop our order short on this 200. If it doesn't come back, so what? We just delete the order. Now, let me go over here. We're going to look up for the dollar CAD, confirming our position being bearish. US dollar Swiss confirms a bearish position there, right? Below the 720, everything's below. US dollar Swiss on the 15-minute chart, same thing. It mirrors a little bit of our the direction of our daily chart. And so we're trading below our 720. Our moving averages had moved up past the 200. So we could have dropped it on the 200, or we could have dropped our order here to sell on this 100 or the 50, kind of around this 88.43 area. It's bouncing up a little bit right now. So we're going to see what happens, but we may be able to place an order there tonight as well. Let's look at the US dollar yen. US dollar yen is retreating back. It's sitting right here next to our 200. But everything is beneath our 720, so we should be preparing to short on the 50 and the 100. And as far as the daily chart, it confirms what we see on our 15-minute chart as well. So we've got real direction going on here. You can see the direction that we've got. We're just down. We've got this nice channel that's just moving down, and just creating lower lows. It doesn't feel like a drastic move, but it's moving quite a bit. So on this US dollar yen, even though it's pulling back against the trend, I'm a short, trader below my 100 and below maybe my 50, maybe even my 21. I could use that as well too. So I hope that you got a good ideas for tonight, for your last your feelings, you're feeling out the market and you're trying to see what to do here. Hopefully these gave you some really great ideas for some easy trades that can be made and some easy entry points and easy analysis for you. So I'm gonna go ahead and get out of here. I hope that you have a good weekend. We know that next week is Christmas, so hopefully everybody's getting prepared for that, and talking with your families and all that. I know that everybody's excited. Have a friend coming in. He's flying in actually tonight, so he should be here tomorrow. So he's going to be here for a couple of weeks as well. So it's always good to see him. This will be our second year kind of together. At the end of the year, he comes down and sees his girlfriend here about every 6 months, but typically, we'd be at the end of the year together. So it's kind of starting a tradition with that. So I'm kind of happy. He wants to talk about the trading as well too. So he wants to kind of hook up with me on that, find out, what's going on with us as far as trading. So I'll get to sit and chat with him too. So I'm going to go ahead and get out of here. Have a wonderful weekend. Everybody be safe and be careful. And if you have questions, concerns, or you need help, definitely feel free to contact me. Okay. Have a great one. Bye-bye.